Okay, let's talk about accounting. But I want you to forget everything you think you know about dusty ledgers and green visors. We're diving into how the fundamental language of business is learning a brand new dialect, and that dialect is technology. It's a really cool story of evolution, from way back in ancient times to a future that's being driven by code.
So that's the big question, isn't it? How did we get here? The journey of tracking value, of tracking money and goods, is basically as old as civilization itself. But the speed of change right now has never, ever been faster. So let's trace that path, just so we can understand where we are today, and maybe more importantly, where we're all headed.
All right, so here's the plan. We're going to start with the super quick history lesson, I promise. Then we'll look at the three big pieces of tech that are transforming everything right now. After that, we'll zoom in on automation with a simple real-world example that you'll totally get. And finally, we'll talk about the challenges and what the future looks like for the whole profession. To really get what's happening now, you have to realize that technology has always shaped accounting. The tools change, yeah, but the goal, that's always been the same: making sense of the numbers. So what we're seeing today isn't some robot takeover, it's just the next big step in a really, really long evolution. It all started way back in ancient times, with people literally carving records into tablets to track things like taxes. Then, boom, a huge leap forward in 1494. A guy named Luca Pacioli introduces double-entry bookkeeping. It's this brilliant idea that every entry has two sides, a debit and a credit. That became the bedrock of all modern accounting. Fast forward to the Industrial Revolution. Suddenly, businesses got way more complex, so we needed professional accountants to sort it all out. And then, of course, the 20th century brought us computers, which started automating all the boring stuff, like calculating bank interest. A job that used to take forever and was full of errors became instant.
So let's jump to today. Right now, we are in the middle of another massive shift, and it's being powered by this trio of technologies that are completely rewriting the rules of the game for accountants everywhere.
The big three are automation, cloud computing, and artificial intelligence, or AI. You can kind of think of it like this. The cloud lets everyone access the same financial data from anywhere, anytime. AI is like the brain that analyzes all that data to find patterns and make predictions. But the real engine that makes it all work, that's automation. It does all the heavy lifting. So to really see how this works, we're going to zoom in on that engine. So what does automation even mean in this context? I know it can sound super technical and complicated, but the core idea is actually incredibly simple. We're going to break it down with an everyday example you've probably seen 1,000 times without even thinking about it. But first, a quick definition so we're all on the same page. Automation is just using software to do the repetitive, manual stuff for us. The goal is really simple: make things faster and get rid of human error. That's it. More speed, more accuracy. That's the whole promise. Okay, so picture this. You're at the grocery store. You're at the checkout line. You've done this a million times, right? But you've probably never stopped to think that you're watching a perfect example of accounting automation in action. Just think about the steps. The cashier scans the barcode. Beep. That single action triggers everything else. The system instantly knows what the item is, it knows the price, and it adds it to your bill. It calculates the total, processes your payment, and spits out a receipt. See? It's brilliant. You input the data just once with that simple scan, and the system does everything else perfectly every single time. And here's where it connects right back to accounting. That barcode scan, in accounting, that's called a source document. It's the official start of a transaction. The system processing the sale automatically, that's the journal entry, the record in the company's books. And that receipt they hand you, that's the invoice. That one little scan triggers a perfect automated chain of accounting events. No one has to manually type anything in. It just works. So this all sounds amazing, right? Error-free, super fast accounting. But a shift this big is never quite that simple. There are always a few speed bumps. So let's pivot a little and look at the real-world challenges and what this all really means for the future of the profession. Yeah, adopting this new tech isn't always easy. For one, it can be really expensive to set up. Then you have human nature. People get used to doing things a certain way, and change can be hard. Plus, this whole new world requires new skills and new training. And finally, you have to be careful not to become too dependent on the systems, you know? So really, it all boils down to this balance. On one side, the huge benefit is a massive boost in speed and accuracy. On the other side, the big risks are the human and financial costs of getting there. You have to overcome resistance and pay for the new systems. It's a classic trade-off every single business has to think about. But here's the most important point in all of this. This is not about robots taking people's jobs. It's about changing the job. When you automate all the tedious data entry, you free up accountants to focus on what humans are actually good at: analysis, strategy, and giving smart advice. Their role is evolving from someone who just processes data into a true strategic advisor.
And that really brings us to the final, most important takeaway, which our source material puts perfectly. In an increasingly digital environment, continuous learning is essential to remain competitive. What that really means is that adapting and learning new things is no longer optional. It's the key to survival and success.
So we'll leave you with this to think about. Technology is getting incredibly good at handling the what we sold, what we spent. The real future for human accountants is answering the bigger questions. Why did these things happen? And even more importantly, what's next for the business? That is where the real value is going to be. Thanks for watching.
Just think about the last thing you bought. Behind that simple, everyday purchase, there's this hidden world of automated accounting that honestly keeps our whole economy running. So today, we're going to pull back the curtain on how that invisible system works, and we'll start with a sound you probably hear every single day.
That sound, right? You hear it at the grocery store, the pharmacy, pretty much everywhere you shop. It's the sound of a sale. But have you ever really stopped to think about what that one little beep actually sets in motion? I can tell you, it's way more than just ringing up a price.
So, let's start right there, at the checkout counter. That simple scan isn't just about telling the register how much something costs. It's the very first step in this incredible, invisible chain reaction of data that keeps an entire business humming along. And that really gets to the core of it all. One single, super simple action, scanning a barcode, kicks off a whole series of complex and really vital updates on the back end. You can think of it like a one-to-many relationship that happens in literally the blink of an eye. It affects everything from the stockroom to the company's financial records.
Let's think about that scan like dropping a stone into a pond. It creates this ripple effect, right? A whole series of consequences that spread out through the company's entire system. So let's trace those ripples one by one and see just how deep they actually go.
And here's what that chain reaction looks like in real time. The second a product is scanned, the system automatically updates inventory, calculates the right tax, and takes control of the payment process. This isn't a sequence of things that happen later, one after the other. It's all an interconnected, instantaneous flow of information. Okay, so let's look at that first ripple, inventory. As soon as that barcode gets scanned, the system logs that there's one less of that item on the shelf. And we're not talking about some end-of-day estimate. This is a precise, up-to-the-second update to the company's actual stock levels.
Now, having that real-time data is absolutely crucial for keeping a company's financial records honest. When auditors come in, they need to check that the inventory a company says it has is actually there. This automated system gives them a clean digital trail that confirms the accuracy of the numbers, the value of the stock, and that it physically exists.
All right, next up is the second ripple, taxes. The system doesn't just know the price. It's programmed to automatically figure out the correct sales tax, like GST or VAT, right on the invoice. All that data is then perfectly formatted and ready to be uploaded to government tax websites. The result? Way less manual work and much more accurate tax returns.
And the third ripple? It's all about control. The exact bill amount pops up on the point of sale screen, leaving zero room for guesswork. Plus, in most of these systems, the cash drawer will only open when a specific employee is logged in. That means if the cash is ever short, the business knows exactly who was on that register, which, as you can imagine, dramatically cuts down the risk of theft.
So we've seen the how, that really cool ripple effect. But now, let's dig into the why. What are the big business reasons that make companies invest millions of dollars into these automated accounting systems?
Okay, so the first big win, and it's a huge one, is just raw speed and efficiency. I mean, can you imagine trying to manually type in every single item sold in a busy store in one day? It'd be impossible. Automation, using things like barcodes, just totally streamlines all that data entry. It lets businesses process massive volumes of sales at lightning speed, which, of course, saves a ton of time and money.
And it really all comes down to this simple, powerful idea. When a task involves a high volume of things and a lot of repetition, a machine is always going to beat a human. It's not about being smarter, it's just about being built for that kind of tireless, consistent work.
The next major benefit is accuracy. A person can have an off day, right? They might accidentally type a 100 instead of a 10, or just add two numbers wrong. A machine, it just doesn't make those mistakes. Automation gets rid of all those simple calculation errors, which makes a company's financial data so much more reliable. And that's absolutely critical for making smart business decisions and, of course, for staying on the right side of the law.
And all of this leads to a massive shift in what it even means to be an accountant. The job has totally evolved. You see, it used to be that accountants spent a huge chunk of their day just doing manual data entry. But now that machines handle all that tedious work, they're free to focus on what humans are actually good at: analysis and strategy. So for instance, instead of just logging sales numbers, they can analyze real-time sales data to figure out which products are underperforming and then go to the marketing team with a new pricing strategy. It's a huge leap from just bookkeeping to actual business intelligence.
Okay, but let's be real here. It's important to have a balanced view. Automation is an incredibly powerful tool, but it's not a magic wand. Implementing it brings its own set of pretty significant challenges that every single business has to deal with.
Which brings us to the obvious question: is automation a perfect solution? Well, like with any huge technological shift, the answer to that is a clear and definite no. It absolutely creates new problems, even as it's solving old ones.
We can really boil the challenges down to three main areas. First, your staff needs constant training to use these complex systems the right way. Second, putting all your financial data in one digital basket, well, it creates a pretty tempting target for cyber attacks and data breaches. And third, you can't ignore the very real concern about job displacement for people whose roles were built around manual data entry. So where does that leave us? Well, it's really a balancing act. The challenges of training, security, and job shifts are very real. But the benefits you get from all that efficiency and accuracy are so massive that they usually outweigh the risks. But, and this is a huge but, only when they're supported by strong security controls and really good employee training.
All right, let's bring it all home and look to the future. We've seen how this automation stuff works and why it's so incredibly important, but what does it all mean for the future of business and finance?
The real takeaway here is that this technology is so much more than just a new tool. It represents a fundamental change in how work gets done. And that leaves us with one last big question to think about. As machines get better and better at mastering the world of repetitive, rule-based numbers, what's the uniquely human work that's left for us to do? What is our new role in this automated world?
Could a robot do an accountant's job? You know, it's not exactly science fiction anymore. Software bots are already, kind of quietly, transforming the entire world of finance using a technology called robotic process automation, or RPA. So let's dive in and break down exactly how this works. So here's what we're going to cover. First up, we'll meet your new virtual accountant. What even is that? Then we're going to look at both sides of the coin, the promise and the peril of all this automation. After that, we'll see it bot in action, doing its thing. And finally, we'll zoom out and ask, what does this all mean for the future of the accounting profession? All right, let's kick things off with the most basic question. What in the world are we even talking about when we say robot accountant? Yeah, this is the big question on everyone's mind. And, you know, the answer might actually surprise you. We're not talking about some physical, clunky robot sitting at a desk. Nope. The reality is, well, it's a lot cooler, and it's all happening inside the computer. Okay, so here it is, robotic process automation. The easiest way to think about it is like this. It's a software bot, a digital worker, really, that you can teach to do all the boring stuff a human does on a computer. You know, all the clicking, copying, and pasting data between different programs. This is what makes RPA absolutely perfect for those high-volume, repetitive, rule-based jobs that, let's be honest, take up a ton of an accountant's time. All right, but here's the thing. Like any super powerful tech, RPA is kind of a double-edged sword. So let's get real about the incredible upsides and the serious challenges that we absolutely cannot ignore. And wow, the contrast here is pretty stark, right? On one side, the potential is just huge. I mean, bots don't get tired, they don't make typos. That means incredible accuracy, reports done in a flash, major cost savings, and way less risk of getting hit with penalties. But then you flip the coin, and the risks are just as real. This tech needs constant updates and training. It opens up some scary cybersecurity holes. And of course, there's that big elephant in the room. What happens to people's jobs? But here's what the source material makes super clear. These challenges aren't necessarily deal breakers. It's not an all-or-nothing situation.
If you have the right security measures in place and you're committed to retraining your people, the benefits can totally shine through. It really all boils down to implementing it the smart way. Okay, so we've talked a lot of theory. Let's see what this actually looks like in the real world. We're going to follow an RPA bot as it takes on one of the most headache-inducing jobs in all of accounting: financial consolidation. So I want you to imagine a massive company, right? With dozens of smaller companies, subsidiaries all over the globe using different currencies. Pulling all their finances together is a huge, painstaking job for a human. But for a bot, it's just a to-do list. First, it zips through and pulls all the financial data from every single one of those subsidiaries. Next, boom, it handles all the currency conversions automatically. Then, it cleverly spots and removes any transactions between the companies so you don't double count anything. And finally, after applying all the last-minute adjustments, it generates the complete polished financial statements. And the best part? It does it perfectly, every single time. And this right here, this is the actual workflow from our source material. You can see it's not magic, it's just a super clear, logical sequence of steps. This is how you turn a messy, error-prone human task into this beautiful, seamless, automated flow. This is exactly what RPA was made for. And this quote, man, it just nails it, doesn't it? A virtual accountant doing the tough work perfectly, over and over and over, without ever getting tired. That right there is the superpower of RPA, flawless repetition without any drop in quality. Okay, so we've figured out what RPI is, we've looked at the good and the bad, and we've even seen it get its hands dirty. So for our final section, let's put it all together and take a look at what this really means for the future of accounting. All right, let's do a super quick review of what we've learned. The big benefits: speed, accuracy, and staying compliant. The number one risk you gotta watch out for: cybersecurity. We saw its role in action, handling complex consolidation under specific accounting standards. And here's the most important piece. The human role, it's changing. It's becoming all about strategy and big picture oversight. And honestly, if you take away just one thing from all this, let it be this. RPA isn't really here to replace accountants. It's here to unleash them. By taking over all that grunt work, the repetitive, soul-crushing tasks, it frees up human professionals to focus on what we do best: thinking strategically, solving complex puzzles, and giving clients high-value advice. It's not a replacement, it's an upgrade for the whole profession. So, that brings us to one last really big question to leave you with. If the bots are going to handle all the routine stuff, what new skills do we, as humans, need to get really, really good at? Think about it. The future isn't going to be about who's the best at crunching numbers anymore. It's going to be about who can understand what those numbers mean, build a strategy around them, and tell that story effectively. So, what do you think are the essential human skills we'll need for tomorrow? You've definitely heard the term the cloud, right? It's everywhere. We're told our photos, our emails, our entire digital lives are in the cloud. But what does that actually mean? Where is this place? Well, today we're going to demystify it. We're going to pull back the curtain and explain what the cloud really is once and for all. To really get why the cloud is such a huge deal, I want you to travel back with me for a second to early 2020. Do you remember that bizarre feeling when the whole world just seemed to hit the pause button? The morning commute, the office chatter, everything we took for granted, it just stopped. It was such a strange time. One day you're at your desk, the next, the building is locked. The places where we spent, a huge chunk of our lives were suddenly empty. The constant hum of business was just gone. And that led to this massive global question. How do we keep things running when nobody can go to the office? For a lot of companies, projects just froze in their tracks. The whole engine of the economy started to sputter. The source material we're looking at today has a perfect name for this. It calls it a black swan event. And that's exactly what it was. Something totally unexpected, super rare, with these enormous consequences that changed, well, everything. It forced us to find a new way to operate, and fast. But in the midst of all that uncertainty, there was one technology that became the ultimate lifeline. And here's the key takeaway from our source. It was cloud computing that kept the lights on. It was the digital backbone that allowed millions and millions of us to log on from our kitchen tables and keep the world moving. So that's the dramatic intro, right? That's why the cloud suddenly became this word on everyone's lips. But what is it for real? Let's break it down to a super simple definition. At its most basic level, it's really just this. Instead of having all your software and data on one physical computer in front of you, you're accessing it from a network of servers over the internet. So the cloud isn't some fluffy thing in the sky. It's a service you can tap into from pretty much anywhere.
And here's why that's a game changer. The cloud is all about freedom. It cuts the cord between your work and a single machine. It means all your important stuff, your files, your photos, your data, and all your programs, your software, they live online. So you can get to them from your laptop, your phone, your tablet, you name it, as long as you can get online. Okay, so now that we get the general idea, let's look at the different ways the cloud shows up in our lives. Because it's not just one thing. Think of it more like a giant digital toolbox with a different tool for just about any job you can imagine. We're going to break down the big ones.
And hey, here's a little peek behind the scenes. This is a snapshot right from our source material, showing how all these different services get broken down. We're going to walk through each of these categories so they make perfect sense.
First up is the one I guarantee you're already using, cloud storage. This is basically your own personal hard drive in the sky. You know when you save a file on your computer and it just magically shows up on your phone? That's not magic. That's the cloud. We're talking Google Drive, Dropbox, OneDrive, all that good stuff. Next up, let's talk about SaaS. It stands for Software as a Service, which is really just a fancy way of saying you use a program through your web browser instead of downloading and installing it. If you use Slack for work or Salesforce for customer management, you're using SaaS. The beauty is you never have to worry about updates. You just log in and it works. Okay, now we're going to get a little more behind the scenes, but stick with me. It's pretty cool. IaaS, or Infrastructure as a Service, is like renting the raw building blocks of the internet. Think about a company like Netflix. They don't own a zillion servers themselves. They rent that computing power and storage from giants like Amazon Web Services or AWS. It lets them get huge or small in an instant, and they only pay for what they use. So let's build on that. If IaaS is like renting the land and the raw materials, PaaS, Platform as a Service, is like renting a fully stocked workshop. It gives software developers all the tools they need to build and run their applications without ever having to worry about the nitty-gritty of managing the servers and all the plumbing underneath. It's a massive shortcut.
And here we are, full circle. This brings us right back to our pandemic story. These are the tools that made remote work actually work. Things like Microsoft Teams, Google Workspace, and of course, Zoom. They're all powered by the cloud, allowing us to chat, edit documents at the same time, and connect face-to-face from anywhere on the planet. Have you bought literally anything online recently? Yep, you've used the cloud. E-commerce platforms are just cloud services that run the whole show. They manage the website, they handle the secure payments, they track the inventory. It's the invisible engine that makes your online shopping cart go.
And finally, one of the most powerful uses of the cloud, big data analytics. See, the cloud provides almost limitless computing power on demand. This lets scientists and companies crunch absolutely massive, enormous sets of data to find patterns, predict trends, or speed up research in ways that would be totally impossible with a regular computer. Okay, that was a lot. SaaS, IaaS, PaaS, a whole alphabet soup of acronyms. But don't worry about memorizing it all, because our source gives us a fantastic, super simple trick to make it all stick in your brain. Here it is. This is the big takeaway. Just remember this one little acronym, SIPCEB. That's S for SaaS, I for IaaS, P for PaaS, C for collaboration, E for e-commerce, and B for big data. It's your cheat sheet to the main services the cloud offers. Just lock it in, SIPCEB. So I'll just leave you with this one thought. Think about your day so far. The music you streamed this morning, the map app that got you where you needed to go, the email you just sent, the show you're going to watch tonight. Now that you know what all the pieces are called, how much of your world is already up there, floating in the cloud? My guess is pretty much all of it. Hey everyone, and welcome. Today we're jumping into a topic that has totally changed the game for accounting. Whether you're a seasoned pro or just starting out, we're talking about cloud computing. We're going to break down what it is, why it's such a big deal, and exactly what you need to know. So here's our game plan. First, we'll dive into what I like to call the cloud's 6 superpowers. Then we're going to get real and talk about the risks, because nothing's perfect. After that, we'll walk through a day-in-the-life example of a cloud workflow, and we'll wrap it all up with the essential takeaways you can use, well, anywhere.
All right, first up, let's dig into what really makes the cloud so powerful for accountants. We've boiled it down to 6 core benefits that are, honestly, total game changers. So, what exactly are these superpowers? Well, think of them like this. We've got accessibility, security, scalability, cost savings, collaboration, and finally, better reporting and analytics. Let's break down what each of these actually means for you. The first superpower is, in a word, freedom. Seriously, forget being chained to a specific computer and a specific office. With the cloud, your financial data is right there, anytime, anywhere you've got internet. This is the engine that makes remote work, well, work. It keeps teams connected and on the same page in real time. Okay, let's tackle the big one. You might hear data in the cloud and think, isn't that risky? But here's the thing. Major cloud platforms offer security that's way beyond what most businesses could build themselves. We're talking military-grade encryption, powerful firewalls, multi-factor authentication, the whole shebang. It's their entire business to keep your data safe. Next up is scalability, which is really all about agility. Imagine your company is growing fast. Back in the day, that meant buying a clunky new server, dealing with a complex IT setup, a huge headache. With the cloud, you need to add a new team member, you just add a new user. It's a few clicks. Your tech can grow right alongside your business, seamlessly. And of course, it all comes down to the bottom line, right? The cloud flips the script on IT costs. Instead of a huge upfront investment in hardware, you're looking at a predictable monthly or yearly subscription. It's generally cheaper, and get this, it includes all the software updates automatically. That alone saves a ton of time and money. Let's make this super concrete with an example we all know. Microsoft Office. Remember the old way? You'd buy a box with a CD, install it on one computer, and that was it. If a new version came out, you had to buy it all over again. Now think about Office 365. It's a subscription, it's always the latest version, and you can use it on your laptop, your tablet, your phone. That right there, that's the cloud difference in a nutshell. Now this next superpower is an absolute game changer for teams. With the cloud, multiple people can work on the very same file at the exact same time. You know the nightmare of emailing files back and forth? Final report.doc, final report v2, final report final. Yeah, the cloud gets rid of all that chaos. It cuts down on confusion and costly mistakes. And finally, the last superpower is all about insights. The cloud gives accountants access to incredibly powerful reporting tools that used to be reserved for giant corporations. This means you can dig so much deeper into the financial data, spot trends you would have missed before, and give leaders the insights they need to make smarter, more strategic decisions. But it can't all be perfect, right? And you're right. As amazing as the cloud is, there are definitely challenges. So it's super important to be realistic. Let's talk about the risks. Really, it all boils down to 2 big hurdles. First, security. There's always a risk of hacking, so picking a reputable provider is absolutely critical. And second, connectivity. The cloud is fantastic when you have a solid internet connection. It's completely dependent on it, and that can sometimes be a challenge, especially in more remote areas. So here's the bottom line. Yes, the risks are real, and you absolutely have to manage them. But the benefits, the flexibility, the cost savings, the collaboration, they are just too big to ignore. For any modern accounting practice, the cloud really is indispensable. All right, enough with the theory. Let's see what this actually looks like in practice. We're going to dissect a real-world cloud accounting workflow step by step. So let's meet our case study, XYZ Company. They have finance teams in 2 different cities, Mumbai and Bangalore, and their mission is to prepare the company's income statement together using a cloud tool like Google Workspace or Microsoft Teams. Now, this whole process is built on one crucial idea. It's called the single source of truth. It's a fancy term for a simple concept. Everyone, no matter where they are, is working from the exact same file. Every change is updated instantly for everyone. No more conflicting versions, just one true, up-to-date document. Okay, so here's how it goes down. Step 1, someone creates a shared spreadsheet. Then the teams in both Mumbai and Bengaluru jump in and start punching in their numbers. Revenue, expenses, you name it. And here's the magic. All of this is happening at the same time in that one file. The system automatically keeps track of every single change, which creates a perfect audit trail. Finally, a manager can review and approve it. And the whole time, access controls make sure only the right people can see or touch the data. Simple, secure, and so efficient. That whole workflow was pretty slick, right? It also brings us to some really important professional terms that you'll definitely want to remember. Let's nail down the essential concepts. If you're a student or a professional, these four terms are the absolute bedrock of cloud accounting. You've got real-time collaboration, that's working together at the same time. Version control, the system tracking all the changes so you can even go back to an older version. Audit trail, the complete history of who changed what and when. And access permissions, which is all about controlling who gets to see or edit the data. You master these four, you've mastered the basics of the cloud. And that brings us to a final thought for you. Now that you've seen how all the pieces fit together, the access, the security, the collaboration, what do you think is the single biggest advantage the cloud gives to a global team? It's something to think about because this technology is only going to become more important in the future. Thanks so much for tuning in.
So you've probably heard this term floating around the business world, ERP. It stands for Enterprise Resource Planning, which, I know, sounds kind of complicated. But really, it's the secret weapon that helps the world's biggest companies keep everything from falling into chaos. Today we're going to pull back the curtain and show you exactly what it is and why it's such a game changer. Here's what we've got on tap. We're going to start with the basics. What even is an ERP? Then we'll get into its one core principle, the big idea that makes it all work. We'll see how it actually functions, check out the cool features and benefits, and wrap it all up with the one thing you absolutely need to remember. Let's dive in.
All right, first things first, what exactly is an ERP? And, maybe more importantly, what problem is it even trying to solve? Seriously, just think about it for a second. A huge global company. We're talking thousands of employees, dozens of departments, supply chains that stretch across continents, and just countless transactions every single day. How do they stop the whole thing from becoming a complete mess? You know, how does the finance team in London have any clue what the warehouse team in Singapore just did? Well, the best way to picture an ERP is to think of it like the central nervous system for a company. It's this one system that connects every single part. We're talking finance, sales, HR, manufacturing, all of it, and lets them talk to each other instantly. It allows them to work together like one big, coordinated organism instead of just a bunch of separate parts that don't know what the others are doing. Okay, so let's get the textbook definition out of the way. An ERP is an integrated software. Now, the two keywords there are integrated and single database. It basically weaves together all the super important business jobs, like accounting, buying stuff, making sure you follow the rules, into one system that draws from one central pool of information. So the whole point, the main mission of an ERP, is to bring order to that chaos we talked about. By pulling everything into one single database, it gets right to the heart of the biggest headaches businesses face. It gets rid of data duplication, where the sales team has one address for a customer and the billing department has a totally different one. And it makes sure that absolutely everyone is working from the same, most up-to-date playbook. No exceptions.
So now that we know what it is, let's look at the beautifully simple idea that makes the entire thing go. This right here, this is the magic trick. This is the core principle. You enter a piece of information into the system just one time, right at the source, and then, poof, it's instantly available everywhere else it's needed. No retyping, no copy-pasting, no more emailing around spreadsheets with final_v2_ updated in the file name. One entry, used everywhere. Simple, but powerful.
Okay, so let's see how this one entry rule actually plays out. How does it work in the real world? Let's trace the flow of information. It's really just a simple three-step dance. First, the system makes everybody speak the same language. It standardizes the data, so everyone agrees on what a customer is or what a product number looks like. Second, a piece of info, say a new sales order, is entered once by the sales team. And third, and this is the cool part, that sales order is instantly visible to the finance team so they can create an invoice, and to the warehouse so they can ship the product. It's totally seamless.
And here's the real payoff. Because that flow of information is so smooth and the data is so consistent, the people at the top can do some incredibly powerful stuff. They can accurately compare how different parts of the company are doing and set realistic data-driven goals for the future, because they know the numbers are solid.
All right, so we've covered the what and the how. Now let's get to the part you really care about, the what's in it for me. Let's look at the specific features and the real-world benefits they bring to the table.
So if you pop the hood on an ERP, these are the key features you'll find. We've already talked a lot about that centralized database. Well, that's what makes real-time data possible, and it guarantees data integrity, which is just a fancy way of saying you can actually trust your data. And the modern cloud-based ERPs, they take it to another level, using things like AI and machine learning to predict future demand, and even using digital assistants to automate boring tasks. That frees up your people to do the more important, creative work.
So why do all those features matter? Well, they translate directly into some massive benefits. Real-time data gives you real-time insights so you can make smarter, faster decisions. Better coordination and less duplicate work? That lowers your operational costs. And having one secure system improves your data's integrity, tightens up your internal controls, and at the end of the day, just flat out reduces your business risk.
Okay, let's bring this all home. If you remember absolutely nothing else from this explainer, I want you to lock this next concept into your brain. This is the ultimate takeaway. This is it, the golden phrase, a single source of truth. What does that really mean? It means the end of those meetings where people argue over whose spreadsheet is right. It means that everyone, from the CEO down to the person on the factory floor, is looking at the exact same data. It is the foundation for trust, for alignment, and for making smart decisions across the entire organization.
So, to make sure this sticks forever, here's a quick recap. The core of an ERP, a single database. The key benefit it delivers, data integrity. And that all-important buzzword to remember, single source of truth. Got it? Good.
And that brings us to a final thought for you to chew on. Think about your own job or any company you know well. Just imagine the time, the energy, the arguments that could be saved, and the much better decisions that could be made if everyone was working from one single source of truth. How would that change things?
You know, whenever you look at a company's earnings report or its balance sheet, what you're really seeing is a story told in numbers. But here's the big question. How much of that story can you actually trust? Today, we're going to pull back the curtain on the silent digital guardians that work 24/7, making sure those numbers are real. So let's get right into how they do it.
And this is really the fundamental question, isn't it? I mean, whether you're an investor, an employee, or just someone curious about a company, you're putting a lot of faith in the data they present. But what happens if that faith is, misplaced?
Because here's the reality. Behind every single number, there's a process, and that process is run by people. So every number is vulnerable. A simple slip of the keyboard can create a huge error. But then there's the much scarier risk of someone intentionally messing with the numbers. Without really strong checks and balances, the whole financial picture can become unreliable and fast.
So, how do modern companies actually fight this? Well, it's not with more spreadsheets or more paperwork. It's with a super powerful partnership between a set of rules and the technology that enforces them. Let's meet these two key players.
First up, we have something called ICFR. Now that's a mouthful. It stands for Internal Control over Financial Reporting. But let's just forget that for a second and think of it as the company's official rulebook. It's the financial constitution that management creates to stop errors, prevent fraud, and make sure every number tells the true story. It defines what has to be done to keep things accurate. And then you have the enforcer, the ERP system. ERP stands for Enterprise Resource Planning. This is the company's central software brain. It's this massive, integrated system that manages everything from finance to HR to sales. And, most importantly, it's the place where that ICOFR rulebook gets programmed and automated. If ICOFR is the law, the ERP is the police force, making sure the laws are followed.
And this is where the magic really happens. The ERP system takes that ICFR rulebook and brings it to life. It automates the rules so they aren't just suggestions on a piece of paper. They are hardwired into the company's operations. Every single action leaves a digital footprint, creating a permanent, unchangeable audit trail. This partnership makes it incredibly difficult for anyone to make a mistake or commit fraud, and it gives managers a crystal clear, real-time view of the company's financial health.
Okay, so that's the big idea. But what does this actually look like in the real world, day to day? How does this digital guardian control the thousands of financial actions happening inside a huge company every single hour?
Well, it all starts with a core concept called the Responsibility Assignment Matrix, or RAM. Now, this isn't just some chart hanging on an office wall. No way. It's a super detailed digital map built right into the ERP software. For every single financial task you can imagine, it dictates precisely who is responsible for doing it, who is accountable for it, and who just needs to be kept in the loop.
And this RAM becomes the foundation for some seriously powerful automated controls. Take authorization, for example. You want to make a big journal entry? The system itself will literally block you and require approval from, say, the CFO. Or what about access control?
If you work in sales, the system physically locks you out of the payroll functions. And here's a really clever one. The ERP can actually check the HR database to make sure you've completed the required training before it will let you perform a really complex or risky task.
But controlling who does what is only half the battle. To guarantee financial accuracy, the system has to be just as obsessed with when things happen. The timing of a transaction can literally mean the difference between a profitable quarter and a losing one.
To handle this, the ERP meticulously tracks 2 different dates for every single event. First, there's the transaction date. That's the day something actually happened, the day a sale was made, for instance. But then there's the accounting date, also called the posting date. That's the day the event is officially recorded in the company's books. Now, these 2 dates aren't always the same, and that difference is incredibly important.
So why does this matter so much? Well, this control ensures what accountants call a proper cutoff. It makes sure revenue earned in June actually gets recorded in June, not sneakily pushed into July to make the next quarter look better. It also stops people from backdating transactions to hide something. And it automates compliance by locking reporting periods to line up perfectly with real-world deadlines, like for filing taxes.
Okay, so we have a powerful system of rules, and we have this robust software enforcer controlling people and time. Everything should be totally secure, right? Well, that brings us to the next critical layer of our story, because the Guardian itself can become a target.
This quote really says it all. With increasing reliance on technology, cybersecurity has become integral to accounting and financial reporting. Think about that. This means protecting the ERP system from an outside attack isn't just some IT problem anymore. It's now a fundamental issue of financial security.
Because the impact of a breach is frankly catastrophic. We're not just talking about stolen customer data, as bad as that is. A hacker could get in and directly manipulate the financial numbers. They could invent transactions, delete records, and completely destroy the integrity of the company's reports. The loss of trust from investors, customers, everyone, it would be immediate and absolutely devastating.
So, let's pull all of these threads together and really lock in the big picture here. Why is this combination of rules, software, and security so absolutely vital in today's world?
So here's a quick recap of our key players. You've got ISO FAR, which sets the goal, accurate, compliant numbers with 0 fraud. Then you have the ERP, which is the muscle, the system that automates and enforces all the controls. The RAM is the map, defining exactly who is responsible for what. Change control gives us that crucial audit trail. And finally, the system is smart enough to flag high-risk stuff like really unusual transactions for some extra human review. When you boil it all down, it really comes to this. Trusting a company's finances is no longer just about trusting its leadership. It's about trusting the integrity of its systems. This powerful fusion of human-made rules and automated enforcement is truly the bedrock of trust in our modern financial world. But all of this leaves us with one final, very important question to think about. We've built these incredible digital guardians to protect our financial integrity. But as they get smarter, more complex, and more connected, we have to ask ourselves, who is guarding the guardians? And that right there is the big challenge for the next generation of finance and technology.
You know, every company out there, whether it's a huge corporation or a small startup, has a treasure trove. But it's not filled with gold or jewels. It's packed with something way more valuable these days: financial data. All of that info lives in what we can think of as a digital vault. And today, we're going to break down exactly how you protect it. Think about it. Every single number, every transaction, every payroll figure, it all tells a piece of a company's story. But what happens when someone else gets their hands on the pen? When a hacker decides they want to rewrite that story for their own benefit? So let's get right into it. What exactly are we protecting when we talk about this digital vault? And why is it so incredibly important in the world we live in today? At its heart, cybersecurity in accounting is pretty simple to understand. It's all the locks, alarms, and guards you put around that digital vault. It's about keeping people out who shouldn't be there, stopping anyone from messing with the numbers, and making sure the whole system doesn't just get shut down. And look, this isn't just a nice to have. It's absolutely critical. I mean, everything from paying employees to sending invoices happens online now. So having strong cybersecurity is totally intertwined with being able to trust the financial reports. You really can't have one without the other. Okay, so now let's talk about the scary part. What happens when those defenses fail? Because to really get why this matters, you have to understand the consequences. And trust me, the stakes are incredibly high.
So what's inside this vault that's so tempting for hackers? We are talking about the absolute crown jewels of a company. Things like bank account numbers, salary information, customer credit card details, even top secret financial plans. It's all highly sensitive, which makes it extremely valuable. And if a hacker gets in, it can be just devastating. They can flat out steal financial data to sell it or commit fraud. Or they can sneak in and quietly change the financial statements to cover their tracks or even manipulate the company's stock price. And the really frightening part? This can all happen in the background, with management completely in the dark until it's way, way too late. But the pain doesn't stop there. There are strict laws about protecting data. So if you fail to protect your systems, you haven't just been hacked. You might have actually broken the law. We're talking about huge financial penalties and, maybe even worse, completely destroying the trust your customers and investors have in you. Yeah, you can't just sweep this stuff under the rug. When a major cyber attack happens, regulators often demand that you disclose it in your official public financial statements. That breach becomes a permanent part of your company's official history for everyone to see. All right, now that we know just how high the stakes are, it's time to get into the mind of the attacker. To build a great defense, you first have to understand the offense. So let's open up the hacker's playbook and look at their favorite moves. First up is a classic you've probably seen yourself, phishing. It's the art of the fake out. Think about that text message you got that said your package couldn't be delivered, or an email that looks like it's from your bank, but something's a little off. The whole goal is to trick someone into giving away their password or clicking a bad link. Basically, you're tricked into handing them the keys. Next, you've got malware and ransomware. Think of malware as a digital virus that gets into your system to steal things or just cause chaos. Ransomware is a particularly nasty version of this. It doesn't just steal your files, it locks them up with encryption. The only way to get them back is to pay the attackers a ransom. Your data literally becomes a hostage. Now, not all threats come from the outside. This next one is when the attack comes from someone who is already supposed to be there, an employee, a contractor, someone with a key and a reason to be inside the building who decides to use their access for harm. It's that classic movie twist, right? The call is coming from inside the house. Because insiders already know the systems and have the passwords, these threats can be the most dangerous and the hardest to spot. Then there's something called a denial of service attack. Here, the goal isn't really to steal anything. It's just to cause chaos. Imagine 1,000 people trying to rush through a single doorway all at once. Nobody gets through. A DOS attack does that to a company's website or network, flooding it with so much traffic that it just shuts down. And finally, let's talk about a really sneaky one, the supply chain attack. Instead of attacking a company head-on, hackers will go after one of its trusted suppliers, like a software company. They'll hide malicious code inside a routine software update. So when the company installs that trusted update, boom, the hackers have just built themselves a secret backdoor. Okay, that was a lot of doom and gloom, right? We've seen the hacker's playbook. So now let's talk about how we fight back. Let's shift from the problems to the solutions, how we build our digital fortress. Well, every fortress needs gates and guards. The first line of defense is access control. This just means people should only have access to the exact data they need to do their job, and nothing more. And of course, you need good password management. Strong, unique passwords that get changed often. Those are the keys to the kingdom, so they better be tough. Next, you need strong walls and maybe even some secret codes. Your digital walls are your network security, especially firewalls, which acts like a barrier blocking bad traffic from the internet. And the secret code? That's encryption. It scrambles all your data, so even if a hacker manages to steal a file, all they get is a bunch of gibberish they can't read. But, you can have the most expensive technology, the highest walls, the most complex locks, but what's the actual best defense? It might surprise you. It's a human firewall. That's right, we're talking about your people. A well-trained employee who knows what a phishing email looks like, who knows not to use public Wi-Fi for sensitive work, that person is your single most powerful security tool. They are the vigilant guards on the wall. Okay, but let's be realistic. No fortress is 100% impenetrable. No defense is perfect. Sooner or later, an attacker might get through. And for that exact moment, you need to have a plan. This isn't about giving up. It's about being ready to win the fight even after you've taken the first hit. And that's where your incident response plan comes in. Think of it as your fire drill for a cyber attack. It really comes down to 3 key steps. First, detect that you've been breached as fast as possible. Second, contain the problem so it can't spread. And third, Mitigate the damage, get the threat out, and start recovery.
And really, that's the key takeaway here. In cybersecurity, it's not always about stopping every single attack. That's just not possible. It's about being resilient. It's that well-practiced incident response plan that turns a total catastrophe into a problem you can manage, saving you from financial and reputational ruin. And that, right there, is the ultimate protection for the digital vault. So today we're going to talk about a technology that is set to completely rewire how we think about money, business, and, well, trust itself. We're looking at the collision of accounting and blockchain. Let's dive right in.
You know, it's the first thing we all think about when some new technology comes along, right? Is it going to take our jobs? Specifically, with all this chatter about AI and automation, are accountants about to become a thing of the past? Well, let's get this out of the way right now. The answer is a big, clear no. Technology isn't here to replace the accountant. What it is going to do is replace all that tedious, repetitive, routine work. You know, the boring stuff. And this is amazing because it frees up human professionals to focus on what we do best: judgment, strategy, and solving complex problems. Their roles aren't disappearing. They're getting a massive upgrade.
All right, so here's our game plan for today. First, we'll get a bird's eye view of tech's role in accounting. Then we're going to break down exactly what blockchain is in simple terms. After that, we'll see why it's so revolutionary, check out some real-world examples, and finally, we'll look ahead to what this all means for a more trustworthy financial future. So, what does this big tech upgrade actually look like? Well, we're moving away from a world where accounting is just about looking in the rearview mirror at last quarter's numbers. It's becoming real-time, it's becoming totally transparent, and it's even becoming predictive. And all of that is being driven by these powerful new technologies. Now, at the very heart of this whole transformation is blockchain. You've definitely heard the word buzzing around, but what is it really? To get a handle on its power, let's start with the official, kind of textbook definition. Okay, so the official line is that blockchain is a decentralized and immutable ledger that enables secure, transparent, and tamper-proof transactions. Whoa. Okay, that's a mouthful, right? It's packed with some really important words. To make sense of it all, let's use a super simple analogy. I want you to just picture a digital notebook. But this isn't a notebook saved on one person's computer. It's a special notebook that's shared among a whole group of people, and it has some very, very important rules. And it's these rules that give blockchain all its power. First, it's decentralized. That means no single person owns or controls the notebook. Second, it's distributed, so everyone in the group has their own identical, constantly updated copy. Third, it's transparent. Everyone can see every single thing ever written in it. And finally, and this is the big one, it's immutable. Once something is written down, it's like it was written in permanent ink. You can't change it, you can't erase it, ever. So a shared, permanent, transparent notebook. You might be thinking, okay, so what? Why is that such a game changer for the world of finance? Well, it's because those core features, those rules, they directly solve two of the oldest, biggest challenges in accounting: trust and verification. You see, when you take that notebook concept and apply it to keeping financial records, you unleash this whole cascade of really powerful benefits. We're talking 8 huge ones, and they all pretty much boil down to 2 things: a radical new level of trust and security, and massive gains in efficiency and speed. First up, enhanced transparency. Since every single transaction is visible to everyone on that shared ledger, it creates this incredible level of trust. There's just nowhere to hide any funny business. Second, you get improved data integrity. Every transaction is locked in with its own unique digital fingerprint. It's cryptographically sealed. This makes it almost impossible to secretly mess with the data, which, you can imagine, dramatically cuts down on fraud and errors. Third, a streamlined audit process. Okay, picture this. Instead of auditors showing up at the end of the year asking for boxes of files, they can just be given direct, real-time access to this unchangeable ledger. This makes something called a continuous audit possible, where they can check transactions as they happen, not months later. And fourth is enhanced security. That same powerful cryptography that seals the data also protects the whole system, making it incredibly tough for hackers to break in. Now let's talk about making things faster and cheaper. Benefit number 5 is a huge relief for any accountant: simplified reconciliation. Right now, companies spend countless hours just making sure their books match up with their partners' books. But with a single shared ledger, there's only one version of the truth. The books are basically reconciled automatically. And that leads right into our sixth benefit, cost reduction. When you get rid of all that manual work and cut out the middlemen whose only job is to verify things, your operational costs just plummet.
Number 7 is the enhanced audit trail. The blockchain gives you a perfect, chronological, and unchangeable history of every single transaction, ever. It's the ultimate record. And finally, all of this culminates in the grand prize, benefit number 8, real-time financial reporting. Because all the data is verified and updated instantly, managers and investors don't have to wait for quarterly reports anymore. They can get a financial snapshot of the company that is accurate right up to this very second.
Now, the key thing to remember is that all 8 of these benefits really work together. And I know that was a lot. So the source material actually offered a little memory hack to help you remember them. TIASRCAR. Yeah, I know. It's a bit of a mouthful, but it stands for Transparency, Integrity, Audit, Security, Reconciliation, Cost, Audit Trail, and Real Time. It covers all the key advantages.
Okay, so all of that sounds great in theory, right? It paints a really compelling picture. But is anyone actually using this stuff? Let's shift gears and look at how these ideas are already being put to work to solve actual business problems.
Let's start with supply chain accounting. Think about a single product you buy. It might have dozens of different companies touching it on its journey, from the farm to the factory to a shipping container to the store shelf. Blockchain is perfect for this. It creates one single trusted record that tracks that item every step of the way, giving everyone visibility and making sure all the rules are followed. Or how about auditing a huge e-commerce site with millions of transactions? The old way is slow, it's manual, and the auditors can only ever check a tiny sample of the data. Now, flip that on its head. With blockchain, every single sale is already time-stamped and verified on the ledger. The audit becomes automated, instant, and continuous. The boost in efficiency and accuracy is just massive. And finally, let's just talk about keeping data safe. Think about a bank. They're sitting on incredibly sensitive customer information. By using blockchain's built-in encryption and its consensus rules, which just means everyone in the network has to agree before a change is made, they can build a system that makes unauthorized access and data tampering practically impossible. So when you put all of this together, the theory, the real-world examples, you start to see the shape of a totally different kind of financial world. One that's built not just on promises and regulations, but on provable, mathematical trust. At the end of the day, it all boils down to this one core idea. If there's one thing you take away from all this, let it be this. Blockchain enhances the transparency, the security, and the reliability of financial reporting. It's building a much, much stronger foundation of trust for our whole economy. And that leaves us with one last really fascinating question. If this technology can so profoundly change something as old and complex as accounting, just by building a new foundation of trust, what else could it rebuild? Our voting systems, medical records, how we own digital art? The possibilities, they're really endless.